This is Matthew Cratter from Trader University, and today I want to answer the question, will the Grayscale GBTC unlocks crash Bitcoin? And I'm going to explain what an unlock is right now. So GBTC is just the Grayscale Bitcoin Investment Trust. It's an easy way to get exposure to Bitcoin. I don't personally like it because of the high fees, but it is a nice way for people to buy Bitcoin who don't really know how to hold and custody Bitcoin. Right now, the trust is holding approximately 651,000 Bitcoin. The value per share of their holdings is about 32, and then the GBTC trades at a discount to that value, trading at 28.75. So we're going to talk about what this is. You probably heard about the premium and the discount, currently trading at a discount to its NAV. Now the unlock that's coming, the largest unlock will be on July 18th, just in a couple weeks. And this is really, there's been a lot of FUD around this, so I want to explain what this means. It's a little bit misleading to say that 16,000 Bitcoin are going to be released on July 17th. So we have to return to this idea of the discount or premium. We can see here that GBTC was trading at a premium really until the end of February of this year. And since then, it's been trading at a discount. Now, exactly what does that mean? A premium is just when the price of GBTC is greater than the value of the underlying holdings. A discount is when you can buy the underlying holdings at a discount when the price of GBTC is less than the value of the underlying holdings. Another way of saying this is a premium is when GBTC trades above its NAV price. So NAV is just the net asset value. You just sum up all the assets, subtract the liabilities. The main assets, of course, are the Bitcoin that they hold in cold storage with their custodian. You take the net asset value, divide it by the number of shares, and that's how we're coming up with this number right here, the holdings per share, $32.49. So NAV is just what the underlying assets are worth per share, and then the market itself can price GBTC either above that or below that. So a 10% premium, for example, would be when the price of GBTC is 44, like it was a few months ago, and then the underlying value per share is $40. And so you can see that the price of GBTC is trading at a premium to its underlying value. Now, normally people don't pay 110 or don't pay 10% more for something. The only reason they do this is because there is not a Bitcoin ETF yet. And so a lot of investors were forced into overpaying for this or paying more than the net asset value. Of course, this doesn't matter when Bitcoin itself is going up over time. People don't really mind this, or when the premium stays pretty flush. But when it begins to contract and then becomes a discount, this is when people get into trouble. If you're finding this video helpful so far, please hit that subscribe and like button. Also share the video with a few of your friends that you think might be interested in this. So what is this institutional trade, and what is an unlock? Basically, the way the trade works is this, and this is not something that anyone can do. You need to be an accredited investor, an institutional investor. You need to have millions of dollars to your name. So this was mostly done by institutions, and the trade was this. You buy Bitcoin, you buy actual BTC, you send that Bitcoin to Grayscale, and then Grayscale gives you shares of GBTC, an equivalent amount of shares at the NAV price, so right at the value that those Bitcoin are worth. So then you own shares of GBTC at NAV. In order to hedge Bitcoin price risk, you'll hedge your GBTC position by going short Bitcoin futures to hedge the price risk. Now, the basic trade here is you get to buy GBTC at a discount. Let's say you get to buy it at the NAV of 40, and if everything goes well, you'll be able to sell it at a 10% premium at $44 per share. The reason you short the Bitcoin futures is because you want to lock in the Bitcoin price. You don't want to have exposure to Bitcoin's price in this. It's really more a bet that you can sell the shares that you were given at NAV at a premium to that in the open market. So that's the basic way you entered the trade. Now, after 6 months, you're as an institutional investor, you're locked up for 6 months. This is the lockup. And then you get the unlock after 6 months. And this is what all the news is about. So after 6 months, these institutional investors are allowed to exit the trade. So when we see this chart here and that there's 16,000 being unlocked on July 17th, what this means is that 6 months before, institutional investors entered into that trade. So how do you exit this trade once you're unlocked, once you're allowed to sell those GBTC shares on the open market? There are two pieces. One, you're now allowed to sell those shares. You can just trade them like a stock. You just sell them. And this allows you to lock in that premium, assuming it still exists. The other part of that trade is you no longer need that hedge against Bitcoin price exposure, so you buy back the futures. You were short the futures, now you buy to cover, or you buy to exit the futures. And so there are really two dynamics happening here, and there's no way that institutional investors would do this trade without hedging out Bitcoin price risk. So we're going to have selling pressure on GBTC, but buying pressure on BTC futures. The selling pressure on GBTC drives down the price of GBTC relative to the NAV, the net asset value. And this, all other things being equal, this increases the discount to NAV. The NAV is just based on wherever Bitcoin's trading. That's how you value the assets. But when you have excess GBTC selling, this will increase the discount to NAV, all else being equal. Now, when GBTC trades at a deep discount to NAV, some investors will choose to buy GBTC instead of Bitcoin, which leads to less spot demand for Bitcoin, for BTC itself. On the other hand, so that would be bearish for the price of Bitcoin. On the other hand, when these institutional investors buy Bitcoin futures, that drives up the price of the futures. There's an arbitrage between the futures price and the spot price, and so this creates buying pressure on Bitcoin itself. So one of the things people don't realize is this unlock is actually bullish for the price of Bitcoin, all else being equal. Of course, we could have more FUD come out. We could have Musk doing something. We could have China doing something. But all else being equal, you're going to have excess buying pressure of Bitcoin futures, which drives up the price of the futures and the spot. And you're going to have excess selling pressure of GBTC, which widens that discount and makes GBTC trade at a greater discount. So the immediate result of the unlock should be buying pressure on BTC as these futures get covered. The immediate selling pressure will just apply to GBTC because there is no Bitcoin that is going to be sold at the unlock. This is what a lot of people are missing. We've talked about this a little bit in past videos. GBTC, Grayscale, it's a black hole that sucks in Bitcoin, that sucks in BTC itself. And the only way that Bitcoin BTC ever gets out is when Grayscale collects their 2% annual management fee. I think they can extract some of the Bitcoin that way. Again, that's a very small amount of the total assets under management. And as such, it's essentially, we can essentially say that once BTC enters GBTC, it doesn't come out again. It does leak out in small quantities because of this management fee, but essentially most of it stays locked up in there forever. So to emphasize this again, the unlock does not mean that BTC is going to be released and dumped on the market. Only GBTC is going to be dumped on the market. And again, everyone knows that this is going to happen, so it may not even affect the premium or discount. Things that everyone knows are going to happen and end up getting priced into financial markets. Financial markets are always forward looking and trying to discount what is known. Now, there are some other implications though. When GBTC traded at a large premium, there was a large incentive for institutional investors to buy BTC, deposit it at Grayscale, and then do this trade. And for a while, Grayscale and these traders who deposit their BTC at Grayscale were actually buying more Bitcoin than the miners were producing every day. And this was one of the reasons for the large run up. There was all this BTC being sucked off the market. Now that BTC is still off the market. It's locked up in Grayscale, and it's unclear if that can ever be released again. If Grayscale moves from a trust to an ETF, that would be able to be redeemable for BTC. But what we need to know for now is that because of this because the GBTC premium has shifted to a discount, there are now a lot fewer people who want to buy BTC for the purposes of doing this trade, buy BTC and deposit it at Grayscale. So this means that some major buyers of Bitcoin have disappeared for now, and we've certainly been seeing that in the price action. It also, there's sort of a second order effect, which is much slower, which is that to the extent that GBTC trades at a large discount to NAV, a lot of people, especially institutional investors, will actually buy GBTC instead of BTC, because you're basically get to buy a dollar for 90 cents or 85 cents or whatever the discount is. At least that's what it looks like on the surface. And so when there's a deep discount to NAV, some people will choose to buy GBTC instead of BTC. And so their buying pressure will not help BTC, but will only help to close the GBTC NAV discount. So we can see this is very complicated, but I would say that the first order effect is institutional investors covering their future shorts, and this should be net bullish for Bitcoin at each unlock. Now, none of this would be happening if the SEC weren't a bunch of morons. Bitcoin's been around for 11, 12 years, and there's still not an ETF for this. The SEC says it's too dangerous, which is ridiculous, because they'll let you trade a triple leverage oil ETF. They'll let you trade a lot of garbage, especially leverage ETFs, which don't track the underlying very well over periods longer than a day. So this is really, it's hard to know why this is happening. Maybe there's pressure from the banks not to allow this to happen, etc. But all else being equal, there's no Bitcoin ETF in the US right now. There is one in Canada. There's some outside. But for now, we have these weird dynamics simply because the SEC has not approved a Bitcoin ETF. And at this point, they really have no justification. The liquidity is there. The hedging is available with Bitcoin futures and options. And they're just dragging their feet. Who knows? Hopefully they approve one by the end of the year. But these things are highly politicized, and so it's hard to predict. When they do approve an ETF, this is going to be massively bullish for Bitcoin, obviously, as it gives people an easy way to get exposure to Bitcoin, similar to what the GLD, the gold ETF, did back in the early 2000s. Now, I should emphasize that if you're a long-term hodler or long-term investor in Bitcoin, none of these short-term price dynamics matter at all. This is why I've always said you should buy BTC instead of GBTC. I don't think GBTC is that attractive simply because of the counterparty risk. Maybe it's not large, but you don't get to hold your own Bitcoin. They're deposited at whoever GBTC uses as their custodian. I believe they use either Gemini or BitGo. Either way, someone else is holding your private keys. And what you have is really a Bitcoin IOU saying you can exchange this maybe at some point for Bitcoin, though you can't even do that right now because the shares are not redeemable. So I don't like GBTC for this reason. A lot of people try to confuse and overcomplicate what is really a very simple trade. You buy BTC and you hold it forever. And maybe that means 5 years for you or 10 years. It actually means forever for me. But people, instead of doing the simple thing, which is just buy BTC, put it on a hardware wallet, hold it for a long period of time, they try to overcomplicate it by buying Ripple instead, XRP, or buying GBTC, or buying Ethereum, etc. The other reason I don't think GBTC is that attractive is because of the large management fee. It's 2% a year. At some point, this might be reduced. At some point, GBTC might be converted from a trust into an ETF. But either way, we don't really know when this is going to happen. And this is one reason that closed-end funds and trusts like GBTC tend to trade at a discount to NAV. So let's say there's an 8% discount to NAV, and you're paying a 2% management fee. Roughly, after 4 years, you will have paid 8% in management fees. The thing's trading at an 8% discount to NAV. The math doesn't work precisely like this, but it's a good first-order approximation. Basically, you will have broken even. So even though you get to buy a dollar for 92 cents or whatever it is, you are still paying that management fee, and I believe it's amortized daily if you're holding it, and so there's no way to jump in and out and try to avoid the fee, and as such, GBTC really should trade at a discount to NAV because of this very high management fee. 2% in the current world is a very, very high management fee. If you think about it, you hold it for 10 years and you've paid out 20% of the value. When Bitcoin is down at 35,000, that's not a huge amount of money, but when it goes to $1 million per Bitcoin and you're paying a 2% management fees as well, still, it really will hurt. Which is why I think it just makes sense to hold BTC itself, and then you don't have any taxable events until you sell. As I said, almost all closed-end funds trade at a permanent discount to NAV. It's unlikely that GBTC trades at a huge premium again. Always hard to say with these things. If there's a lot of crazy retail investor demand for it, it could happen again. But it looks like it is flipped for now. GBTC might convert to an ETF, which would mean that you could exchange your GBTC for BTC itself. This would close the discount and it would trade right at NAV. And so there could be, if this happens quickly, you can make an extra, whatever the discount is now, 8 or 10%. You can get that as sort of an extra boost to your returns. But again, we don't know when this will happen. And Grayscale is really incented to keep this going on as long as possible because a 2% management fee is really juicy. Hundreds of millions of dollars for Grayscale every single year. I'm going to be unable to make a video tomorrow, but I'll see you again on Saturday. In the meanwhile, if you found this video helpful, please hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. You can do that right on YouTube after you subscribe. And let me know your questions and comments and video ideas in the comment section below. And I'll see if I can answer some of those questions in future videos, maybe in Saturday's video. Thanks a lot for watching, and I'll see you on Saturday with a new video.